Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And we are taking a closer look at gold, which in 2024 did pretty well. In fact, better than some of the equity benchmarks, including S&P 500, with its gains of some 20+%. So what's in store this year? Can it repeat its brilliant performance? Let's check in now with Robin Tsui. He is the APAC Gold Strategist and SPDR Gold Sales Specialist at Street Global Advisors SPDR. Good morning, Robin. How are you doing today?
Good morning. Thanks for having me again.
Hey, great having you on. So let's talk about what's been playing out for gold in the past year. So we had a pretty good performance. What have been some of the fundamental drivers you think that have really driven some of this momentum?
Yeah, definitely. We saw quite a strong year last year. Gold price in USD was up by 27%. And it was actually the best performing year since 2010. So the market were surprised by the strength of the gold price. We were as well, but there was some reason why gold price did extremely well last year. I think one of the core reasons has been the robust central bank purchases around the world, especially emerging market central banks, including India, China, Turkey, Poland. They've been ramping up their gold reserves. That's historically, they do lack some of the gold exposure. We also saw rising geopolitical tensions around the world, especially in the Middle East, that saw some safe haven buying during the year. I think lastly, just the growth of using gold as a hedge against market uncertainty. We saw extremely strong consumer and investment demand throughout the world that continued to support gold price in 2024. And as you mentioned, gold was one of the best performing asset classes last year. It outperformed both the global equities and global bonds in 2024.
Yeah, with all those factors in mind, how much is there still going on in terms of momentum to continue that push towards maybe a record high? Is that what you're expecting? We saw last year, we started things with about $2,000 and then hit around 2008. Where do you see prices going in 2025? We
do expect the gold price to continue to hit record highs. So within our base case, we expect the gold price in 2025 to hit $2,900 US per ounce. And if you look at the current spot price, it's only about 6% upside. So we think that, gold price has been doing extremely well in January. We do think that price can be hit. But we do have a bull case that gold price can rally to about $3,100 US per ounce. Now, for that scenario to occur, we probably expect the Fed is to cut rates more than twice in line or more than the market expectations. And we probably need some sort of tensions around the world with tariffs. Obviously, we saw some tensions in the forces around tariffs yesterday with the AI. And also the heightened geopolitics needs to be increased as well to enable gold price to hit around 3,100. But we do think that with the current spot price trading at 2,750, there's only about 12% upside from that level. So we do expect gold price to continue to rally throughout 2025.
Yeah, talking about rates, the Federal Reserve expect to cut rates in the coming year or so. Is there still that strong relationship between rates going down and typically gold prices going up? Is that still a strong correlation?
It's not as strong as before, especially in the last 2 years when interest rates went up in the US. We continue to see gold price outperform other asset classes. I think it's one of the important factors we have to look at. But if we look at 2025, there's three drivers that will continue to drive gold price higher. Again, central bank buying will be the core reason. We do expect central banks around the world, especially maybe China, they will start to ramp up as well, because in the last 2 months, we did see the PBOC start to buy again, just because, the change in government policy in the US. And also, we do expect the strong buying in Asia, including Singapore as well. We've been seeing very strong ETF demand, extremely strong gold trading as well in Asia to support that demand. The rate cut cycle, it will be positive because we do expect the interest rate to decline going forward in the US. And if you look at historically, every time the Fed starts to cut rates, it has benefited gold price in the past. So we do expect these three drivers to be quite supportive to the gold price in 2025.
Yeah, Robin, how much is there a shift in how people think about gold these days? Because for some time not too long ago, people were frowning upon gold because there was no income. Are people starting to think about how they should be parking more gold in their portfolios these days?
You're extremely correct. Having more conversation with clients around the world and also in APAC, I think there's a need for investor ranging from the retail, institutional, even asset owners that we've spoken to. There's a shift towards needing to allocate more to gold in the portfolio. So at State Street, we do advise around 5 to 10% allocations, and that's based on our backtesting that gold price or gold price performance in the past can actually improve your portfolio risk-adjusted return. Example last year would be if an investor has 60-40 exposure to global equities and bonds, the performance will be 9.5% last year, which is quite decent. But if the investor had allocated 10% in that portfolio, the performance will be 11.5%. So including 10% allocation by reducing allocations to equities and bonds, that will improve the overall performance of your portfolio by 2%. And that's why gold has been a very powerful tool for investors to allocate because of its historical performance and low correlations to other traditional asset classes.
Right, talking about performance, I'm wondering as well, is there a seasonal thing to how gold performs through the year? Typically around, I suppose, festive periods, do we see a spark or spike in demand?
Historically, yes. In January and February, we do see a spike in gold jewelry demand. So in December and January of last year, we did see the premium in China did spike a bit. But I think going forward, the seasonality might change because gold price is getting relatively more expensive. And I think there's a shift in the younger generation, how they are purchasing gold as well. So if you look at 20 years ago, jewelry actually represented about 80% of the gold demand throughout the world. But last year, it only represented about 40%. So in the last 20 years, there's been a shift that gold is seen as a jewelry item, but now more as an investment item. And more importantly, it's a very important foreign exchange reserve management tool for central banks. So central banks now, they consume more than 25% of the gold demand throughout the world. 20 years ago, they actually sold gold. So that's been a fundamental shift around how central banks and investors are thinking about gold as a way to hedge against market uncertainty, which we expect there will be more going forward, especially in the next 4 years.
All right, gold definitely doing well in recent years. I'm wondering as well, does silver have a similar story here when it comes to investors getting a bit more interested in that space?
Silver is definitely more volatile. So we do think it's a leverage play, more tactical way to invest. But silver, if you add silver into a portfolio, it doesn't really improve your risk-adjusted return because silver has a very high correlations to equities and bonds. And then most importantly, silver, it's not purchased or adopted by central banks as a foreign exchange reserve currency. So that's the most fundamental difference between silver and gold, that central banks don't consider silver as a currency reserve.
All right, gold getting more attention these days with investors looking at it for various reasons. We've been in conversation with Robin Tsui. He is the APAC Gold Strategist and SPDR Gold Sales Specialist for Street Global Advisors SPDR. Robin, thanks for your time this morning and have a great day ahead.
Thank you.
All right, catch you again soon, Robin. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.